Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video, I'd like to look again at how to use the higher time frame charts to gauge the large degree trend. In particular, how to use our DPs or our decision points on the higher time frame charts as leading indicators to give you advance warning of where support or resistance is likely to come in. For this, I want to have a look at how the market unfolded on Friday, which was June the 3rd. So let's have a look at the ES, the E-mini to start with. You can see we have some setups on our chart here. So the question being is, are they in the direction of the large degree trend, and what is the large degree trend? So for that, we go to our higher time frame chart. Now what I want to do is go back to just as the market had opened yesterday, which again was Friday. So I'm going to jump back to first bar of the day there. So how do you gauge where support is likely to come in or resistance is likely to come in? Well, for this you go back to the previous swing highs or lows. You can see here our charts have connected pivots on to show you where the pivots are. So you go back to this last connected pivot here, right mouse click, do decision point, and as you can see that puts an area on your chart in advance. Can you see that's how that's on the chart there even before the market even gets down there? So it's way in advance. It prepares you in advance for an area of likely support. So if I turn training mode off, let's see what the market did. And as you can see, the market came down, but look where the low of the day was, right at this 15-minute support zone. So how does that help us then in our trading on our shorter term charts? And if I now go down to our 3-minute chart, there's our 15-minute support. You see that? It nailed the very low of the day for you. This is the power of these DPs. Can you imagine how valuable it would be to you as a trader as the ES is dropping down here, knowing that this area is on your chart in advance that has the capability of calling a halt to not only the decline, but then doing a rally after that. So that nailed the very low of the day for you. So what does that mean for our trading? Well, it means that if this is higher time frame or large degree support, it means the large degree trend is now up. So if the trend is up, let's make that a bit bigger. Let's turn it to blue. If the trend is now up off this low here, what does it mean for these sell setups? Well, of course, these sell setups are now against the large degree uptrend and therefore should be avoided. What does it mean about this buy setup? Well, of course, this buy setup is now in the direction of the large degree uptrend and therefore is one you should consider. Let's right mouse click over the blue buy bar, place the analysis on, and even at the first target, the profit there was a nice 3.6R or 3.6 times greater than initial risk. Remember, we use correct position sizing to vary the number of lots, contracts or shares to keep our initial risk small and under control. So when we have losing trades, which we will, every trading approach has losing trades, these losses are kept small, but when the profits come through and they're large, the profits are large in relation to the losses. So can you see how this higher time frame DP was on the chart in advance, allowed you to project an area in advance before the market even got there that gave a potential for support? Looking at this now, this nailed the very low of the day for you on the ES. That then defined the large degree trend is up, which allowed you to avoid these sell setups, take the buy setup, and as such have a nice profitable trade there. Same with the NQ. There's our higher time frame support, nailing the absolute low of the day perfectly for you. Large degree trend was up, therefore you want to be avoiding all those sell setups. Wasn't quite so clear on the YM because the YM just missed the 15-minute support there, but of course you knew that had already come in on the ES and the NQ. So knowing that those two large degree trend was up, you should also be looking for buy setups here. But the star of the show was the Russell Index. I just want to go through this again. So we go to our higher time frame chart. Here's our last pivot low. Right mouse click DP. As I've shown with the ES, remember this would have been on the chart in advance before the market even got there. So it would have been preparing you for potential support. I just want to make that a little bit smaller because when we go to the 3-minute chart, can you see how that also nailed the very low of the day for you? Because that was now 15-minute support, large degree trend was up, therefore you want to be taking buy setups and avoiding sell setups. This TS1 was a good one to take, but also this TS1 was a very important one because if this was a major low on a higher time frame chart, this would be the initial rally which would be a wave 1. This would be the initial correction, which would be a wave 2. So when we look at this, we place the analysis on. A wave 2 should subdivide into minor ABC, which is what it did here. But because this is the initial correction after the initial move of an important high or low, in this case a low, this would be what we classify as a Holy Grail trade setup. In Elliott wave terms, this would be a wave 2. Therefore, we're anticipating the market to make a wave 3 swing. Therefore, our target would be our typical wave 3 WPT, which is there, not this level. So if I grab the risk reward up to that typical wave 3 WPT, that's where your target would be. And as you can see on the Russell, this would have meant a lovely profit of approximately 7 times the initial risk. So a very, very good trade there on the Russell index, and a perfect example of our Holy Grail trade setup. Again, it was all set up for us in advance and preparing us in advance because we had this 15-minute DP on our chart. That's the key to successful trading, having these support and resistance areas on your chart in advance, so you're not trying to react to any setups that come in. You're trying to anticipate and move forward of the market to then be prepared for potential trade setups. So that was a great example there on the Russell index. Going back to the ES, as you can see, that area was preparing in advance for the low, defined the trend as up, avoiding the sells, taking the buy setup. You had a very nice profitable trade there. So a very good example of how to use our DPs on our higher time frame charts to gauge the large trend direction using the MTPredictor software program.